All right, so like I said on Instagram, I was gonna make a video for you guys just going over exactly how I execute in the Forex market. If you don't really know what support and resistance is, I'll go over it briefly. You will have to do a little bit more research on support and resistance. For me, support is these blue candles are bearish and then these white candles are bullish. So for me, this is a formed support low because I have bearish and bullish, and then once it's closed, belief here is the support low, and then resistance is bullish and bearish. So right here, this would be a resistance high, this would be a resistance high. And so for me, it's always a bullish paired with a bearish and bearish paired with a bullish for support and resistance. That's about as the 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 depth of knowledge that you'll need for executing on this strategy. So I use this on SPX on the daily chart, and I'm just gonna start here because this is the most recent trade I took. And so I have this is massive bullish push here, and then I have this bearish candle. Once this is closed on the daily, because this is a daily, I'm using the daily chart. Once this is closed, I then mark that resistance high, and the high is 4777.80. Mark that, and then I need a bullish candle to close over, and then a bearish candle to close under this line, and then I will catch the retest. So I entered in this candle right here. I posted on my Instagram just in case you missed it. But yeah, I entered in this candle here for a sell. Of course, my stop loss goes above the resistance high, and then I target 2 or 4 to 1 R on the daily chart. I'm usually going for 4 to 1 R just because it takes so much time for the setup to formulate, and so it doesn't really make sense for me to go like 2 to 1 R when it can clearly just do 4 to 1 R or more, and that's what this green line is here. And so how I calculated that was I have my entry line, which is 4777, and then I put, based on your broker, you want to put the stop loss 1 to 2 points above the high. So even if they test the high, the spread won't the spread won't be able to pull you out of the trade basically. And so this high right here may be hard to see, but it says 47.95, and the high of this candle is actually, if it wants to load, the high of this candle is 47.9460, and so 47 for this broker AAFX, the spread is usually like 1.2 points. So 47.9560 minus 4777.80. That this is the resistance high, 1 point above it. This is the yellow line that marked the resistance that was closed over, then closed under, and then of course I'm looking for the retest. So my stop loss would be 17.8 points, and then timesing that by 4 is 71 points. So my risk 17.8, reward 71.2 points, and that's where this line comes in, this green line. And how I got that green line was just take this number right here and subtract it from the entry. I'm just gonna do it backwards just because I mean it doesn't really make a difference to me. And you see it 4706.6, and then it comes down to that area and price is executed there. There's a noise going on outside right now, but it looks like the mic is slightly picking it up, but not really. Um, but you can see price clearly came all the way down. entered in this day, so it took 2 more days to hit the target, and then money was made there. And so, of course, after this trade, I would be looking for, this is support low right here, but it was not closed under, so there's nothing there. And so if I just go left, I'm just going to go through examples to the left. And so right here, I have this high. Why is this a resistance high? Because it's a bullish paired with a bearish. It is now resistance. This is resistance 2 here, because you have bullish, bullish, bearish. So that would make this a high. This one's higher, and it closed over, closed under, and then I would catch the retest inside of this hammer candle right here. And then stop loss would go above this high. And then 4-to-1. I think I did 2-to-1 R, and so that's kind of where you have to, as a trader or investor, you have to kind of modulate what you're doing with your positions, because not all of them would just flow smoothly like this. This one right here, it clearly was sitting right here on this support level for 4 straight days, and so we could do the math. Let's do the math on it real quick because I don't remember. It's really hard to see that, but it's 4601. 4601 minus 4588. 13-point stop loss times 4. 52-point reward minus 4588. 4536. And yeah, so it literally, I changed the properties of this. Yeah. And so it literally, well, it just moved it up again. But stop loss was 4536, and you can see it literally just missed it. 4542 is the low of this candle. And so the 2-to-1 R, of course, was already hit inside of here. So if you went 2-to-1 on this move, you would have got executed same day. 2-to-1, what was it? 13 times 2, 26. 2588 minus 26 is 46. 46 is 66. Can't do math this morning. That's what people always say, like, nah, I can't get into trading. I'm not good at math. Yeah, I can get that way too. 4562. I don't know why I said 66. The most math you have to do in trading and investing is use a calculator. But so 4562. Excuse me on that, saying that incorrectly. So right here, so 2-to-1 R would have got hit same day, and then the 4-to-1 R would have got missed. And so even if you went 3-to-1 R, 3-to-1 R would have got hit. But for me, I usually go for target 4-to-1 R and then watch the position and adapt to any type of change I need to make. Clearly, there is a change to be made when it's sitting here on this right here in this level. If I put a line right here, this is what I'm saying. It literally came down, supported, and the fact that it didn't push under at all, I just closed the trade. I didn't let it come back above 2-to-1 R. So I was up over 3-to-1, and I didn't let it come back above 2-to-1. Trade was over, profit was had. And then if you look right here, if you mark this, well, we're going left to right. Let me not confuse anyone. And so we had the sell, the first sell, and then we had the second sell that I just went over. And so here we go. And so right here, if I mark this high, it closed over this resistance high. It got closed over, but it didn't close under. So I wasn't looking for an entry there. If I come down here, again, closed over, didn't close under, and that's why I personally like using the daily chart, because on a lower time frame, this probably did close over, close under. Well, potentially depends on what time frame. Um, and then people got short, thinking it was gonna retrace this push here, and they, you know, they didn't they didn't have a profitable setup. And so here, if we come down, now clearly marking this support. Why is this a support low? Bearish, 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 bullish. Once this candle closes, this is now the support low because I have a pair. Just looking for a blue and white. If you know what support and resistance is, you're good to go. I'm kind of just reiterating that for anybody who doesn't. Support low, closed under, closed over. There is no retest. So what does that mean? Does that mean I can chase it up here? Yes, I could potentially chase that and then still have my stop loss beneath the actual peak low. But me, I'm not gonna chase that. It's just a trade opportunity not to be had. Um, and that's just how I personally operate. Because it shows enough opportunity consistently for you to not have to chase anything. And then this setup, so I mean, it's just market structure, but it happens on any pair. So just because SPX did close under, close over, and then didn't retest, doesn't mean Euro USD or GJ or EU didn't do a similar setup that I could have profited on for this basically this entire push up, because there was no move, there was no trade until the here. And so if you trade on the December 6th, and your last trade opportunity that didn't give a setup was over a month ago, I mean, that's a long time to be waiting for a trade. And so don't get me wrong, I'm just showing this on SPX because that's what I execute on it the most, but I definitely utilize this on multiple pairs. And so you'll have other opportunities, because me personally waiting over a month for a 2-to-1, 3-to-1 R trade, it's not it's not really ideal for. Now if you load up on the position um, using the probability of you being corrected, then cool. But for the most part, I just do my allotted risk and then let the trade do its thing. Then I get paid when I get paid. And so if we drag all of this over, so that was a trade. So yeah, two trades right here. I'll go over the buy first and then I'll go over the sell. If you're thinking it's more than this, if you're looking for more, Forex trading, stock market, I mean, I've generated 7, 8 figures in the stock market. I've generated 7 figures in the Forex market. Like, it's not it's not complex. You don't need all the indicators. You don't need a bunch of stuff on your charts. You just need to do this. I mean, we're 14 minutes in the video. I've already showed you the strategy. I'm just going over it because when you see multiple examples, your mind will then captivate them and then allow you to give you the enhanced ability to execute on them. And so right here, real quick, I have push down, support low. It closed under, bearish close under, bullish close over. I enter the retest in this candle right here, this blue doji candle. My stop loss goes 1 point beneath this low. And so again, this looks like, I'm just gonna use this because that red is not the easiest to see. 41,960. So I'm gonna put it 1 point beneath that. So 41,98. 4236. Where does the 4236 come from? It comes from this support low that was closed under, closed over. 4236 minus 4198. I have a 38 point stop loss. If I times that by 4, I'm looking for 152 points. And so I'll add 152 plus 4236. So what did I say? 4388. I believe that said 4388. Let me look real quick. Yeah, 4388. And so as you can see, barely got hit. Honestly, oh yeah, I manually closed this because when it made this wick, just missing it, I was like, I was not looking at the chart at the time. Um, just that day I was traveling, and so when I came back and I see it like holding, it didn't go beneath this low, which is a good sign. Like this candle didn't go beneath the low of this candle, pushed up, but then it was just sitting here. Basically, it closed just like that. I'm like, bro, just take it off. It did go through, so if somebody just literally after learning this strategy, if you just literally have your TP set there, you would have been good to go because it pushed through it. It pushed through it 97. So it looks like a little wick, but it pushed through it almost 10 points through it. And so that was the trade there. And then if you mark this resistance high right here, stop loss goes above the high. And so when you're looking at the chart, that buy would have came second because this is how the chart would have looked. And then it would have formed that, formed that. So once I get the close over and then close under, that's when I put the line. I don't put, if it just closes over, I don't put the line. It has to close over, then close under, then I put the line. And see here, you clearly have a retest and it just goes right through it. I'm not worried. That's one thing about risk to reward and risk management. I'm not risking 100% of my account. I'm not risking 50% of my account. So just because this goes through it and starts heading toward my stop loss, I'm chilling. This is the daily time frame. There's a lot of market maker structure when they're creating. There's an M right here as well. And so it looks like the only reason to even push through it like that is simply because of this M. And so if you waited, if you can't see the M, if I go like this, you can clearly see the M right now. And so if you waited, if you recognize that it was potentially forming an M because this was the left part of it, and then you waited for it to come back down and then get in here after this candle closed and then basically broke the low of this candle, got in here, you would have went straight into profit. Me, I mean, I didn't really care. It's the whole point of me trading like this is so I have such a simple approach. I can just let the trade do its thing after I set my orders. So I have 43.42. The high is 43.97. So 43.98 minus 43.42. 43.98. 42. So 56 point stop loss times 4. Why am I timesing it by 4? If you're asking, if you forgot, that's just because I'm looking for 4 times my risk. If you want to do 2 times your risk, 3 times your risk, if you want to do 1 times your risk, I mean, the win rate is high enough for you to go 1 to 1 R. But for me, like I said, I'm waiting multiple days for this to set up. So this one was pretty this was pretty close together. So I had a trade here, this buy here on October 5th, and then I was in a sell on the 16th, which if you trade every day, you're like, what the heck, that's not close. Like I said, there's multiple pairs. To me, this is close because hitting 4 to 1 R here, hitting 4 to 1 R here, you make plenty of money. And 224 points. Even if you were to use on SPX, you can use really high lot sizes. On SPX, even if you're only using like $10 per point, yeah, that's still 2,200. But I usually use 100 per point or more, and so making 22 grand here and then turning around and making another over 22 grand here. That's what I'm saying a buy. They're not that far apart. I'm saying it in a money aspect, not trade wise. We had 224, and I need 224 minus our entry is 43.42. So 4118. So put this line at 4118. And as you can see, 4 to 1. And that's why I like 4 to 1, because it's kind of like the reversal point. And so that got hit. And then if we go left, bring this up. So you had 4 to 1. So basically you had so far just going left. I know you're learning it today, so you're like, dang, I've been missing out on all this money. I mean, it's part of trading. That's the whole reason I'm making this video. So not everyone's missing out. You had 2 to 1 or 3 to 1 R here. You had 4 to 1 R here. So you have 4 to 1. We'll just call this 2 to 1. That's 6 R. This one didn't do a retest, so there's nothing. Then you have 4R, that's 10. And then you had another 4. That's 14. That's 14R. And then if we just keep going left, and if you look right here, again, that's why I like using the daily. This right here, I don't remember. I'm pretty sure I didn't take this setup. There's no reason for not taking this setup. I just wasn't looking at SPX at the time. But if you look right here, it would have been a loss. So you would have lost like 40 points, a little over 40 points. But yeah, and then if somebody did this under over, catch the retest, it pushed up, but then dumped right back down to this low. If you're ever wondering why, I need to turn that off. If you're ever wondering, where we at, 23 minutes. If you're ever wondering why there may have been losses right here like that, it's just simply based on how price reacts to the line. And so if you put because this is clearly a support low, it closed under, it closed over. You get in for the retest, it goes up, and then it comes right, it literally closes bearish, and then goes up again. Look at this resistance right here. Look at the difference, and that's one thing that I'm not really gonna go over. But this strategy is simple because I mean you mark a support low, you wait for it close under, close over, retest. That's simple. You put your stop loss beneath the peak. That's simple. The advanced part that I'm not gonna go over is because I mean for what? You have your own time to figure that out. It's a lot to go over, but just for the purpose of this video, it clearly resisted right here in this area. And to me, this is a U triple wick. I've said this many times. It has a wick right here. This wick is higher. The one on the left is the exact same height. And so you would have one avoided a loss right here if you were looking at the. If you weren't looking, you would have took a loss. Um, but if you were watching, you would have saw like, okay, this is clearly. And same thing. There's a it formed a W right here. This is the left side of the W. This is the peak, came down, and then this is the right side of the W. And so you could have easily closed your trade in profit and not have had a loss just from this structure right here. Or you could close your trade early when this closed under and then use this as resistance. This is hindsight, and so this candle could have did the same thing and maybe you would have closed it there. But for me, giving it another day, because after closing bearish like that, it's not really a bullish type of thing. Because if you can see right here, when it retested, look how bullish it closed. The trade I just went over, it got you in right here, closed up here. That's pretty bullish. Coming back down, they were just grabbing more orders and then went up. Right here, this is not that bullish. But then they gapped it up right into the resistance and then sold it off. And so that's just something you have to learn over time. Strategy is super simple. You'll make money. Even if you took this, the reason why I wasn't looking at SPS to take this is because it's only one candle right here. And so this support low that I just had marked, and what I mean by one candle, it's only one candle and it barely closed over. And so that's just something you have to pay attention to. I mean, same thing with this. It barely closed over it. You can see if I move this back down here. If you're getting confused, just rewatch the video. This low right here was closed over a lot more than these two. This one, easy to avoid, very easy to avoid using this support low just because it closed under and over. It barely closed over, which is, to me, that's not a great sign. And then this second one, if you put it right here, you had time to get out in profit. And if you got out, right into this resistance area, the right side of this U triple wick 320, that's almost 30 points of profit. And so based on your stop loss, you would have been almost one to one if you did that. But that's what I'm saying about modulating. Super simple strategy, easy to make money, but there is a bit of art. There is a bit of tactfulness that you must have. I mean, that's trading. It can't be that easy. If it was that easy, everyone would do it. There's a reason 90% of traders fail. One, because maybe they took a loss right here, took a loss right here, and then when this comes, they're scared to take it. Think about it. If you risked, let's just say prop firm wise, if you risked 2% here, and then you risk 2% here, and then you make 4% right here, you're back to zero. And then on this sell, you risk 2%. Now you're up 4% because you went, and that's what most people can't do. They either can't hold to the correct risk to reward, or or they're scared to take the next setup just because they took two losses prior. It's usually the third one that if you lose twice in a row, the third one is probably gonna do exactly what you need and want it to do. And so if we so right here, um, barely closed over, I wouldn't have entered. This one right here, entry but exit early because of clear resistance. This one right here, it was very. You can see this right here is very different than this. This finished the W. This made the right side of the W. If you can't see it, there's a W right there. This made the right side of the W. You got in on this candle, closed pretty bullish. They pulled it back, but then they went straight up and closed it up here. So at the end of the day, I'm looking at this mega bullish candle versus end of the day when I got in, or end of the day when I got in, and then next day, and then kept coming back down. That's very different price action. And then even this gap down, that gap down probably scared a lot of people out of their trade. But they usually fill gaps, and so I was just chilling in the trade. I mean, as long as my stop loss doesn't get hit, or it's not showing me something that's clearly I need to close the trader, like this U triple wick right here. This, if I did take this support low, I would have just took a loss. I mean, there's nothing really, other than it barely closing over the line, there's nothing really showing that this may not do exactly what I expect it to do. But I wanted to go over that slightly thoroughly because um, I know the first part of the video was like, oh my gosh, this is so simple. Um, I don't have to do much of anything. You don't have to do much of anything, but you do have to make sure that you understand and not try to, because a lot of people, I've noticed a lot of people will try to like talk their way, talk their way out of closing the trade early or out of taking a loss. And so just make sure if you're a trader, you know exactly what I'm saying. If you're not a trader, it's basically like if you get in for this buy right here in this candle and it goes up and you clearly see it's not giving you the price action you should expect for them setting up the move, people will try to make up all these reasons on why it's going to go up instead of just realizing that, hey, this is not doing what I want it to do. I can either let it hit my stop and be patient, or I can get out when it's clearly resisting. Um, I don't really have a better way of explaining that, but if you're a trader, you know exactly what I'm talking about. Just make sure that you focus on price action, and the move will show you what it's supposed to show you. Like this right here, resistance high, closed over, closed under, there's no retest. So there's no trade right there. This resistance high, no close over, same thing, nothing. I keep dragging left. Support low right here, and same thing. If you look, and really, I wouldn't even use that support low. I'll use this support low. This support low right here is closed over, closed under, closed over, and then you got the retest on the second half of the W. Again, here's another W, second half retest, stop loss beneath here. 7435. We'll call it 40 points, so 120. So 120 is 494. 494 is right here. If you're confused on what I just did, I was just doing the mental math. This support low, closed under, closed over, retest in here on the second half of the W. I did entry minus stop loss, and then I times that by 4 in my head, and then I added it to my entry, and that your 4-to-1 R would have got hit right here. And so even if somebody did take two losses right here, you would have been already up on this buy right here. And then if we come resistance closed over, and actually if you look right here, and that's another thing about this strategy that can be it can be slightly confusing, is which high do you pick? Again, for me, so even if right here, like I marked this, there was no retest, using using this high, there was a retest right here, and then it hit 4-to-1 R. I'm not gonna calculate it. Y'all get the point. I'm sure you get the point. Resistance high, close over, close under, retest, sell, put your stop loss above the peak, and get paid. Um, and clearly it hit 4-to-1 R. It definitely hit 4-to-1 R. That was only a 40-point stop loss, so times 4, that's 160. So it needed to go down to 440, which 440 is right here. So same day, you would have got 4-to-1 R same day off the retest. So yeah, you wouldn't even have been down. You would have been up 4-to-1 R here, up 4-to-1 R here, and then it's a bit weird because I'm going left. When you're trading the live market, there's not going to be anything to the right, but we're going from right to left, just so I'm going back through the chart. But you would have been up 8R, and then you would have lost. I'm just gonna say 2%. If you're risking 2% per trade, you would have lost 2, 4, but you would have already been up 8%. So you'd have been net 6%. This high didn't get closed over. It may have got closed over. No, it didn't. Didn't get closed over. This high right here, I mean, same thing. Did we get a higher one? Yeah, right here. Trades right here. I mean, by now, we're 37 minutes into the video. It, it's simple. There's other things that you have to do. It's extremely simple, but there are other things you have to do. Pay attention to price action. Watch for it sitting at the same level for multiple days. Watch for it testing the same level and holding in opposition of the direction you want it to go for multiple days. And just let the trade do its thing. And again, you see why I use the daily chart, because I'm rarely going to um, have a setup that's basically gonna not do exactly what I want it to do. And if you took this right here, well, you probably wouldn't have took that. What was that? 577, 60, let's say 606. What is that? 30. We'll call it 30 times 4 or 120. 577, 100. So 480. So right here. So you wouldn't even have took that buy. I mean, maybe you would have. Maybe you would have got out of the sell and took the buy. I mean, you would have lost a little bit. But by the time it got to the buy, you're still holding your sell. So this retest, well, nah, it would have closed right here. Trade would have closed in profit right here. And so if you took this retest, you would have lost 20 points when you just made 120. So your net profit 100 points. But yeah, same thing. Over, under, retest, dumped. I don't know what R it hit. I mean, this is back in July. I traded majority of these setups, but I mean, it's back in July. That was 9 points. So 18. You only needed You only needed 36, which it definitely got hit because this is 84. You only needed 36 points to have 4 to 1 R on this sell right here. Would have got hit. And the tricky ones are the ones that don't retest. And some people, they may come up with something where it's like if it goes within a certain distance of the line, I'll take it. That's your prerogative. For me, you gotta retest the line. If you're not gonna retest the line, I'm not getting it. There's other pairs, there's other setups, but that's enough for the video. I mean, I've gone over plenty of examples. I'm sure you see how simple it is. When you see me posting these profits from FTMO and from AAFX and funding pips, this is what I'm doing. I'm marking the resistance high. After it's closed over, then under, I catch the retest. I put my stop loss above the high. I catch my 4 to 1 R, and I'm done with the trade. If it comes back to the level, if it comes back to the level like this, I'm not gonna take that. The reason I'm not gonna take that is probably gonna break it. I know a lot of people have been struggling with, and like I said, if you're confused, just rewatch the video. I know a lot of people have been struggling with um, having a broker, being in the U.S., being able to trade like indices, commodities, and it's still being on the what's it called, on the MetaTrader app. AAFX is still on the MetaTrader app. It's on MetaTrader 4, MetaTrader 5. Deposits or withdrawals are pretty quick. Deposits are of course faster than withdrawals. My deposits are usually like 4 to 15 minutes. Withdrawals like 2 hours or less. Um, but I mean that's it. And they have no swaps and they have no commissions. So when you think about that for a second, like how are they making money? There's slippage. Their slippage is not the best. So if you're considering scalping and you want to use AAFX, I wouldn't recommend it. I wouldn't recommend it. If you want to do intraday swing, um, go for it. But scalping, I would not recommend it because you're gonna get slipped. I mean, it's swap free, it's commission free. They have to make money somehow. They're gonna slip you. It is what it is. But um, they're still on MetaTrader, so I believe they're somewhat regulated. I appreciate that it has fast deposits, fast withdrawals, and you can still use the MetaTrader app. Because I was using KOT, but they got removed from MetaTrader. Then I was using HeroFX, they got removed from MetaTrader. So this is the broker I got. FTMO funding pips. That's the trio. This is the setup on the daily. It works on any time frame, any pair. The lower the time frame, the lower the time frame, you're gonna want it to the lower the time frame, you're gonna want it to basically do the move twice. This is gonna move in a second. I mean the H1 you can usually catch it off the first move. And it'll do its thing. But under the H1, like M30, M15, M5, you're gonna want it to do the move twice. What do I mean by that? Right here. H1 it'll just play out. I just use the daily because I like catching the larger swings. So my profits are larger. But what I mean by twice is how this closed under right here. Support low, under, over, under, over is now done it twice, then catch the retest, and then stop loss goes beneath the peak. That's what I mean on lower time frames. The reason why you wanted to do it twice is because it's a lower time frame. It you need more confluence in the setup. but you'll see what I'm talking about. But that's it. That's all I got. Quick video. It'll get uploaded as soon as I get off of here. 45 minutes. Not everybody's gonna watch it all, but really you only need the first portion of it if you're an advanced trader. Intermediate may have to go closer to the end. Beginner, watch the whole video. If you don't, you're probably not gonna make it. If you can't sit through a 45-minute video, probably not gonna make it. But if you have questions, just hit me on Instagram. I'm out.